This is Daniel Eigenman from the Daniel Eigenman Finance Forum. I hope you're all having a beautiful weekend here in Perth. It's been actually quite nice, as you can see. It's actually so nice that I've decided to record my weekly video from my garden this afternoon. You can see it's nice and actually quite, yeah, very pleasant. This week I read that the demand for fixed rates has been rising and rising and rising. It's not a surprise to me, simply because I've had a lot of demand from my clients for fixed rates. I've done a lot of fixed rates in the last 2 to 3 weeks, actually the last month probably, fixed rates. So it's not really a surprise to me, but that gave me an idea to really go over fixed rates and what they are, why you would consider a fixed rate, and what your options are today in my video. So really, what are fixed rates? Fixed rates is pretty simple. They are what they say. They are rates that are fixed for a certain period of time. Usually in Australia, it's up to 10 years, but the most, hi Yvonne, the most popular ones are 2, 3, and 5 years fixed. All right, so keep that in mind. Now, whilst the idea of a fixed rate is very appealing, and it has a few benefits, for example, with a fixed rate, you know exactly what your repayments are going to be for the next 2, 3, or 5 years. There won't be any adjustments to your rates during that same period of time. It's also very easy to plan and to budget. Now, if you have an investment property, a fixed rate, you know exactly what your repayments are going to be for the next 2, 3, or 5 years. And one thing that a lot of people don't realize, if you are at a level of borrowing above 80%, where mortgage insurance might be applicable, a lot of lenders are going to price their rates higher if you are above 80%. However, there are some lenders out there that will not make any difference in rates, whether you are at 80% or more. So it might be a great opportunity for first-home buyers who need to borrow 5% or a little less to actually have access to very low rates. I mean, you could be at 95% and still have a rate well below 4%. So keep that in mind when you're thinking about fixing. Now, there are some disadvantages, obviously, and it's really about being a lot more rigid than a variable rate. With a variable rate, you can do pretty much what you want. You could set it up today, you could pay it out tomorrow. With a fixed rate, yeah, you could still do that, but you would have what's called break cost. In other words, if you don't go all the way to the end of the fixed rate term, you'll have what's called break fees, and it's actually quite expensive, depending on the lender, how long the term still is, and how much the borrowing is. And obviously, there are limitations as to how much repayments you can make. Some banks won't allow you any repayments, but most of them will allow you a small amount of repayments, you know, between $10,000 per year to $30,000 or $20,000 over the period of the rate loan. All right, so these are some of the disadvantages. Now, why would you consider a fixed rate? It's really a personal decision. It's really about what are your plans for the next 2 to 3 to 5 years with your property. You know, if your intention is to buy a property and to sell it within that period of time, probably fixing is not a good idea. Or certainly have a fixed rate that goes beyond that period is not a good idea. It's also a question about where you think the rates are going to go. If you think the rates have plateaued, they've hit bottom, and you think that the only way is up, maybe it might be a good idea to fix your rates. All right, so but really at the end of the day, it's your decision as to what you want to do. Okay. Now, what are your options? I mentioned that in a video before, probably I think it was last week, where I said you really have a choice of 3 different types of rates. You can either go variable, you can either go fixed, or you can have a bet each way, where you have part fixed, part variable. Again, it is really up to you as to what you want to do. Okay, so that's what I really wanted to do today. I wanted to say that, yes, fixed rates are very popular, but make sure you plan ahead. Make sure you understand your position on where rates are going in the next 2 to 3 years, and also what your plans are with your property in that same period of time. If you have any questions about fixed rates, know what fixed rate you can actually have, In some cases, fixed rates are actually lower than the variable rates, so it's a great opportunity to fix. If you ever wanted to fix, now would be a good idea. But as I said, any questions, leave a message or post a message down below, or just give me a call on 0412 022 110, and I'd be more than happy to talk to you about your options of interest rates, variable, fixed, or split. Thank you very much. Have a nice and beautiful Sunday evening, and I'll see you next week. Bye. Hi, Dallas. Hi, Stephen. See you later. Bye.